I'll start out by introducing myself, and then I'll invite the panel to their chairs, and I'll have them introduce themselves. I'm Vijay Balakrishnan. I'm with Deluxe Corporation. Now, you folks may know of Deluxe as a check printing company. We are 102 years old. We are the world's largest printer of checks. But less than 50% of our revenue today comes from check printing. We are in a variety of different businesses, which includes treasury management services, digital marketing services, and what I do is I head up ePayments for the company. We have 4.6 million businesses as customers, and my group offers digital payment alternatives to our business customers. And certainly mobility is an important part of our solution set to enable businesses to make payments from anywhere at any time. So with that, let me invite the panel up to their places.
Did you get the log line?
I do.
So I'll start from the right and go to the left. Esther, can you introduce yourself?
I certainly can. Can everyone hear me okay? Good, good. This lob is flopping around up here. I'm Esther Pigg, and I am with FIS. How many of you have ever heard of FIS, Fidelity Information Services? Oh, great, thank you. Well, for those that haven't, let me tell you a little bit about us. We are a global financial technology services provider, and we focus primarily in the areas of banking and payments, in asset and wealth management, as well as in institutional, commercial and retail banking, institutional banking. We are headquartered in Jacksonville, Florida, but we have a significant office here in Norcross, and we have probably close to 1,000 people that either call the Norcross office their own or in this area. We're approaching a little over a $10 billion organization. We are truly a B2B company, why many of you probably have not heard of us, but that's a little bit about FIS. Globally, we have about 53,000 associates, and we work with about 20,000 clients in 130 countries. So we are excited to be able to be a part of this. I'm excited to be here in Atlanta and the growth that we're seeing here in expanding our fintech footprint, which is already very significant. As far as what I do within FIS, I'm in our payments division, and we focus on debit, credit, prepaid card, loyalty, fraud. We also have a merchant group. So anything really in the payments ecosystem, whether you are an issuer or an acquirer, whether you are a business or a financial institution, we are focused on providing the services and the infrastructure that those entities need in order to be successful. I have responsibility for product strategy, which spans across all of the product areas. And my team really looks a little bit longer term, and we're also the voice of the market. So we're out there talking to our clients. We're doing a lot of research. We're trying to understand what our competitors are up to. And then we bring that back, and we work with our business partners, the general managers of the various lines of business, to develop our strategic investment plans. And so that's a little bit of what we do. And one of the areas of focus for us, obviously, is around, I would say, kind of three areas: digital transformation, data intelligence, and driving security by design. So those are the areas that we're, what I would call our strategic imperatives.
Okay, thank you, Esther.
Hi, I'm Spencer White. I guess you can hear me because, wow, that was loud. Hold it out like this. I myself am a recovering telecom professional. Spent somewhere around 12 years with Singular Wireless and AT&T, which was actually where I made a what I think was an interesting career pivot along the way into mobile financial services, and then really deeply into payments innovation. So at Singular, I had the good fortune of driving a number of very early mobile payment trials. We did our first contactless payments trials in 2004, I believe it was, and then 2005 we did some larger scale things. And while I was there, we created a new sort of focus area that we called mobile financial services. So I drove strategy for that and led a number of initiatives around the build out of mobile banking when that was a cool new thing. And then eventually started a project by reaching out to the other wireless carriers that eventually became a company known as ISIS. Not the bad one, the good one. But we were a joint venture between AT&T, Verizon, and T-Mobile. And we launched the second commercial mobile wallet play in the US right behind Google Wallet, and about a year or so before Apple. That was a really interesting time, but as time goes along, we got sold off to Google, and now I'm with a company called Wonder Technologies. And unlike FIS, I'm certain you've never heard of Wonder Technologies. We're a Series A startup. We're based out of Laguna Beach, California. We have a presence here in Atlanta, and you're looking at him, Army of One. But we are I guess the best way to describe us is we are a digital gifting, incentive, loyalty, and voucher company, which may sound to you like marketing. It is kind of marketing tech, but we have a payments pedigree. We do what we do by eliminating a lot of extraneous components to the customer experience and to the business process for doing things like driving business incentives, for redeeming loyalty points, and a bunch of other things that today require either extra steps, extra paper, or plastic. So we're directly integrated with the payment networks. So we get rid of all that extra stuff, and we link value that's being provided by a business to one of their customers by linking it directly to the existing credit and debit cards that they already have in their wallets. So by doing that, certainly that's a green benefit, right? We're not putting more plastic and paper in the market, but there's bigger benefits to doing that. One of which is, since we do everything through network connections, we can see transactions in real time and apply credits back to cards in a way that doesn't require us to touch point-of-sale systems. If you've ever deployed any type of payment or marketing service where you have to touch point-of-sale systems, you know that that's a headache if you've got a monolithic POS infrastructure. But if you're trying to do something like, say, an airline that's issuing vouchers for travel delays and you have to be able to redeem them across a range of merchants, POS integration can kill you. So we take all of that out of the equation. And the last thing I would say about that, when we talk more as we go along, is by going through what I call the mobile wallet wars, when everyone was trying to figure out how to get people to use mobile payments, the one thing that we've continued to struggle with is the fact that tender behavior of pulling out your plastic card is so ingrained that it's ridiculously hard to break that habituation unless you've got a lot of time or you can throw a lot of incentives at people. One of the things that drew me into Wonder when we were first forming the company was the fact that since this is linked to your card, we don't have to change tender behavior at all. And in fact, we don't care how a customer tenders. They can use their plastic card, their mobile wallet, they can do a card on file transaction, or they can do an in-app transaction. So we take that friction out of the equation, and we've been enjoying some pretty interesting success because of those benefits.
David?
So I'm Dave Elve, and I'm with a company called Paygo. We are a startup in Atlanta. Is it not working? Oh, it should work now. Okay, now, there it goes. I'll start over. Dave Elve with Paygo. Paygo's based here in Atlanta. We're a startup company. Just a little bit about me. I've been in the energy, we're really focused on the energy and the utility space. So I've been in the industry for a very long time. Some of you remember, if you're as old as I am, the old telephone systems, the rotary dial phones. Well, the energy and utility space is about there. Actually, I shouldn't say it's a little further than that. But the meters on your house are used to be called electrical mechanical meters. They look like a watch, like an old watch. And someone would come by your house every month, and they would read your meter, and they'd write the meter reading down in a book, and they would take that book back to the office and someone would key it into a old COBOL system. That's how the system started, and that's about when I started in the industry. Today, that industry is really being transformed in the energy space, and obviously you've heard a lot about renewable energy and things like that. Well, a lot of utilities are replacing these old dumb meters with what's called smart meters. And these smart meters are a little bit like the phone that you have in your hand. They're two-way wireless communication. They have firmware upgradability over the air. They have memory. They're able to be disconnected over the air as well. A lot of applications for that. Years ago, I was the first president of the Smart Meter Manufacturers Association. We use that smart meter to help the industry become more efficient. And in Paygo, we actually use that smart meter to help customers do something that we've been doing in mobile wireless for a long time, and that's prepaid wireless. We do prepaid energy. So what does that mean? It's very similar as what you'd see in the prepaid mobile space. If you have a prepaid mobile phone, maybe your kids do, maybe someone you know, you buy minutes. In the prepaid energy space, you buy days. So you can buy days of power. If you go on prepay, you will be notified on a daily basis. Here's where the mobile piece comes in, right? So I'm on the Georgia Power Mobile or Georgia Power Prepay Energy Program. Every day I get a text message and email on my phone that says, Dave, you got 5 days left on your account. You got $20 left in your account. Very similar to what you'd see on a mobile prepaid phone. A couple weeks ago, I got disconnected because I went down to zero. And because I'm in denial that I need reading glasses, I didn't see in my text message that I had negative $6 on my account. Instead, I thought I had $6 on my account. So I got a phone call from my wife. Our power had been disconnected. I made a payment on my phone using the Paygo system, and within 45 seconds, my meter had been reconnected. So we provide that service for Georgia Power and many other big utilities around the country. We provide them lots of different ways to pay, obviously credit, debit on your phone, ACH. We also have a cash application. Believe it or not, people still pay cash. About 20% of Southern Company's customers are what's called underbanked, and they pay cash. Last month, using our cash payment application, again, it's on your phone, using a barcode, customers download it to their phone, go through a checkout line, and when they hit that checkout line, using that barcode on their phone, they are instantly validated as a Georgia Power customer. There are business rules associated with that barcode that hit real-time Georgia Power systems. They make, say, a $20 payment. That payment is applied to their account in real time. They get a text message and an email thanking them for their payment, and their power is reconnected in about 45 seconds. So we've now moved meter to cash in our space to seconds, where it used to be at least a month, sometimes more. So last month we did about 50,000 payments, cash payments just with Georgia Power using this application. So that's a little bit about Paygo.
Okay, great. As you've just heard, there's such a broad canvas of applications and industries just amongst our panelists. So what I want to start off with is kind of stage setting. When you say mobile financial services, what does that mean? And does it mean anything that, any transaction that where either a phone or a tablet is used? Or when you say financial services, is it only limited to banking? What about insurance? What about brokerage? And what about other industries? So what I want to do is to kind of just broadly define, if you will, how big the sandbox is and what the sandbox looks like. So let me start with you, David. When you say
sure.
Mobile financial services, what does that mean to you?
Well, our system it's very simple. It's not that sexy, right? The average customer has to pay their bill every month. So we get customers who need to make a payment every month. If they're on prepaid energy, they pay 4 times a month. So they pay, in August, a lot of our customers pay 8 times a month because it's hot. So for us, mobile is, financial services is really around making payments. And these are credit card, debit card, ACH, and cash payments. Very simple, but very critical payments. Because again, if these customers don't make their payments on time, they will get disconnected, right? Or they will suffer, their credit rating will suffer, if you will. So again, I don't know if that's kind of where you were going, but this is that's to us is really consumer-based payments. And again, some of them are multiple times per month.
Okay, consumer-based payments. Spencer, what's your take?
Yeah, it's a great question. Back in that 2004, 2005 timeframe, we were trying to define what mobile financial services were and would be. And at that time, the basic categories were pay with your phone, bill pay, mobile banking, person-to-person money transfers, and international remittances. And that was about it. But even that was pretty nascent. But today, well, let me step back once. One of the things that always resonated with me when trying to figure out where mobile payment was going was I would think about it from the standpoint of what mobile's bringing to money, right? And at the end of the day, it's this device, secure computing device with a graphical user interface, connected to an interactive data network, and it's highly personal, trusted, and today it's packed full of sensors that allow it to interact and respond to its physical environment. So there's a ton of things that you can do with it. What I've seen happen over the last decade or so is such a fracturing of the role that the mobile plays. It's no longer about the mobile necessarily being the central part of that transaction or that commerce. It can play an ancillary part, but an important part, because it's the link, it's the communication channel that is with consumers and business users all day long, everywhere that they go. So it's a communication channel. It's a point to do authentication. But today, as you see, it plays a lot of different roles around order ahead. It can be used for as just an ancillary component to a broader mosaic in the sort of digital commerce space. So it's gotten actually a lot harder to define, in my estimation, of what mobile financial service is now than it was some time ago. But I was looking at FIS's latest brand video, and I think the thing that caught my ear when I was listening to that was you have a comment around being there at the point of decision. And I think that's really the sort of nexus of where mobile is intersecting with all of commerce today. Since it is a real-time, pervasive, ever-present device, it's really being used to drive those purchasing decisions by whoever's making the purchase, and it's being used to drive the crediting or authentication decision by whoever's providing the payment service.
So being there at the point of decision, I really like that, the way you put it.
I don't want to steal Esther's thunder. That's their
You can
brand
find
trademark.
that on,
Yeah, whether that decision
on my
happens to
LinkedIn
be
site.
a payment decision or balance inquiry or whatever. Yes, I'll take it from there.
Sure. It is really such a broad spectrum when you start talking about mobile financial services, because traditionally you would think it's banking services, it's mobile banking. Everyone wants, kind of traditionally moved from everything that I did on my website, I want to now transfer to my mobile device, but it's gotten to be so much more than that, whether you're a bank, whether you're a merchant, whether you are a commercial provider of insurance, mortgages, whatever. Really, it's everyone that touches the financial life of a consumer or a business. So as you are traveling down your daily path, your daily journey, what are you doing that involves financial services, financial transactions? It's all over the place, whether it's paying your bills, whether it is receiving offers and rewards. When those rewards actually can become currency, you can use those rewards to make purchases with. I mean, payments is really behind the scenes in so many different areas, and the mobile device and or mobile experience has become so pervasive. One of the things that I think what I was hearing from these guys as well is it's everything at the point of decision, but it's going to become even more predictable than it is now. We're going to be able, I think consumers are going to expect us, or our customers are going to expect us to be able to offer up, take care of those payments, just like an Uber experience. When you go in, you hop out. You don't have to think about, how you're making your payment. all of these things are going to take place because it is become very personal. We're going to get to know you so much better in your financial journey, and we're going to be able to predict so much more accurately what your needs are as you're doing the save up. I love the coins example. You're able to apply, you're able to round up and apply those funds wherever you want them to. One example is paying down a credit card. One may be a mortgage. One may be another bill. It could be used however you choose to. So, I mean, I think the answer is it's endless. Mobile financial services touch practically everything in your life as you're going through your day, whether it's buying a Starbucks cup of coffee, whether it's hopping in an Uber or a Lyft, or whether it's paying one of your bills.
You know, I would just say one other thing to add to that, when you're talking through that, Esther, made me think about another big change is, you know, everything that is in the traditional payments part of financial services for so long has been oriented around a card presentment at a point of sale. Mm-hmm. But what, at least what I'm continuing to see is that the point of sale is getting kind of long in the tooth. I'm sure it'll always be there to a certain degree, but more and more, the actual mobile device is becoming the point of sale, and it's not necessarily a point of sale that a clerk is taking a card and swiping it in their mobile device, but you're making all of these purchase decisions and actions like Uber or like a order ahead type of thing from the mobile device.
Yeah, you're leveraging that wallet. You are. So, I mean, I think it's going to be a combination. Obviously, some of us are still I find myself sometimes doing the oddest things because I will still pull out my card and I will, you know, dip it or swipe it or whatever I'm supposed to do. I will use my phone sometimes. I'll use Apple Pay. And then I still have not quite mastered the watch pay thing. That is just not, you know, ergonomically comfortable for me. But I could do that. Or I could just do the order. I love the order ahead like at Panera where you can just order and go pick it up and, you know, I'm assuming that is all working really well for them, I hope. But, I mean, the variety that we have based on customer preference, because some of us are going to keep wanting to use our cards. Some of us are going to adopt the pay wallets really quickly. Some of us are going to continue to pay online with card not present, as we say. And then some of us are going to be, you know, very comfortable leveraging a mobile wallet and have that information preloaded and usable at any point along our journey.
Yeah, I'd like to add, you bring up some good points. So one of the things that in our industry, in the energy industry, is this whole idea of energy efficiency. So obviously people are looking at, I mentioned, you know, solar, but you have more energy efficient lighting and energy systems. So one of the things that customer utilities, so again, we're a B2B2C as well, as we sell to Duke Energy and Southern Company and others, is they're very interested in the energy efficiency piece. So as part of that mobile experience, when customers are making those payments and they do pull up their mobile phone, they do see how much energy they have used in the last day. And in fact, we actually have an application where we'll show them how much energy they're going to use each day for the next 7 days. And what that does is it educates the customer. A lot of it's weather-based, right? If it's 98 degrees in Atlanta, you're going to use a lot of power, right? And so what we do is we send them energy tips. Hey, tomorrow it is going to be 98 degrees in Atlanta. You go to this website, learn how to save energy. And the fact that customers are getting daily notifications of their usage, they're using less energy. And what studies are showing on our system is that customers are using about 10% less energy, which for customers is a big advantage, right? Another thing, they're not paying deposit, just like, you know, mobile phones, you're not paying a deposit or in a contract or paying fees, that type of thing. That all applies. But again, the fact that they're using 10% less energy is a great customer sat adder, and this is one of the reasons that, again, utilities are enjoying this, is customer satisfaction increases and energy efficiency increases.
And it gives them so much control. I mean, that's
the one word they use in those word maps is control. Always pops up.
Okay, so that's an interesting perspective. It's not just transactions, but also delivery of information associated with the transaction. So let me take it in a slightly different direction. The kind of mobile transactions that get most of the press are consumer transactions. You've got the Venmos, you've got the PayPals, and you've got the Uber application and so on. But let me also talk about the elephant in the room, and that is business transactions. I mean, the business to business and business to consumer. transactions. For example, take a case of an insurance claims adjuster making payments from the field. I mean, that could be a potential use case for mobile payments. So I'd be interested in your thoughts in terms of traction. Where is the traction? Is it more on the consumer side, consumer-initiated transaction side, and where do business-initiated transactions fit into that picture, Esther?
The research indicates that, yes, it's being really driven by the consumer adoption of mobile payments. And I think that we're in business, but we're all consumers, right? So as we as consumers have these mobile experiences that delight us, we want the same thing for our businesses. So it's kind of that. I think we will pull it into business, but statistically, it is still lagging behind. The use cases that are going to, I think, pull the businesses in is exactly what you referenced, Vijay. So kind of P2P transactions that we're all familiar with, whether it be Venmo or PayPal, or globally, it could be, an Alipay or WeChat. But those are the things that are really driving and are really taking off. Zelle was recently launched last year, and Bank of America is seeing a tremendous amount of growth in their transaction volume on P2P payments. So when I say P2P, that's like I would pay Spencer for, a sweet water 420. Am I supposed to advertise who provided it?
No, but you can send me money anytime you want. That's fine.
Buy him 2 beers.
But 2 beers. And so that kind of a thing, where we split the bill, or we share rent, or there's some other reason that I'm going to pay another person. Because right today, there's really no good way of doing that other than cash or a check, because most of us can't accept a credit card, although that's changing too. So what is really leading the way for businesses are what's called B2C, so business to consumer payments. So in the cases where there has been a disaster and the insurance adjuster does need to give cash immediately, today it is a hassle. They either cut them a check, and getting a check deposited is a little bit easier than it used to be, but it's not great. And you certainly don't get immediate credit. And ACH is slow, and you don't want to have to keep up with what that account number, what your account number and routing transit number is. So the whole concept of being able to just have someone's phone number or their email and sending them money is going to really drive some of those use cases around insurance claims, rebates, and then the whole gig economy of being able to pay somebody for the services they render today. Being able, just like Uber pays their drivers with P2P payment, with real-time payments that are considered the B2C, like similar to a P2P. So those are what we're seeing is starting to pick up and take traction.
Okay, Spencer?
Yeah, the B2C arena is really where we operate and excel. So it's near and dear to my heart. And we operate in in maybe a counterintuitive space, because a lot of what we do is we help businesses pay consumers. It's usually the other way around. But the use cases that we have been disrupting and innovating around are things like, let's say you're going on a flight and your flight is delayed, right? This typical thing that's going to happen from an airline is they're going to provide you with a paper voucher. That paper voucher is inefficient in a number of ways, not the least of which you've already had a bad travel experience. Now you've got to queue up in line to get this piece of paper, which is very foreign to you, and then you've got to figure out where to use it. Then you've got to go somewhere, try to use it, hope the clerk knows how to use it, and that's just on the consumer side. On the business side, the problem is they just took a bad situation and made it worse, so their customer satisfaction ratings went down, but they also have to now manually, in a lot of cases, go collect those pieces of paper from all of these merchants and do a reconciliation, and they have tons of problems with fraud and leakage and other things that are going on around there. So for a company like ours, we come in and we digitize all of that, and we focus on those two things we know consumers, travelers in this case, always have with them: their mobile device and their card. Their card is the conduit to attach the value to, and then we transfer that money into their account when they make a qualifying transaction. So all the requisite business controls are there, and since it's all digital, there's no need to do all the manual reconciliation from that perspective. But from a business perspective, that also means that it opens up a whole lot of new opportunities. So Esther talked about the loyalty point thing. I don't know if many of you realize, like in the travel and hospitality space, and I know you probably got better stats than I've got, but there's something like $48 billion worth of unspent points. So that's those points that are sitting there not doing the consumer who's part of that program any good. They're really not achieving the benefit and the goal that the business had for creating a loyalty program in the first place. And the only way to kind of get value out of that is to get that currency moving, getting it flowing. And today, if you go to most of these big loyalty programs, what you'll see is a standard raft of redemption opportunities. There's plenty of ways to burn your points online. You can go to any affinity partner and you can trade your points to buy down something, or worse yet, the one I hate is when you can buy overpriced crap out of a points-based catalog that you don't need. But the harder thing to do is figure out how to redeem those in the real world. So if you think about what we talked about before about POS integration, you can do it that way, and it's a great experience, but it's kind of slow to roll out. For us, we can do this through a card-linked method, use the mobile device as the communication channel to provide the opportunity for the member to see if they want to redeem points at a point of sale. But what's really interesting about that model is now it's not just driving value for the member, the consumer in this case. It's not just driving value for the loyalty program provider, but this is now real discretionary money in the hands of a customer that can be directed to a merchant to redeem. So there's a business model there that says there's value being created for that merchant that can accrue back to the program provider and to the consumer as well. So in my estimation, those types of applications where you've got sort of a multi-sided relationship, in this case, a consumer to business to consumer to business and business to business, those will spawn a lot more opportunities to see mobile financial services adopted and applied in a B2B, in a pure B2B context that we're not seeing at scale today.
David?
Yeah, so in today's world, it's been really cold here in Atlanta, right? A lot of customers in about a month from now will get a bill they can't pay. Can't pay it. It's going to be a $300 bill. They can't pay it. So they will go to a variety of agencies like Salvation Army, United Way. There's a federal agency called the Low Income Heating Program, LIHEAP. They'll go to those and they can't pay the bill. And that process today is they'll walk up to, or they'll call, make an appointment, show up at the Salvation Army and present their bill, and they'll have to get assistance for that bill. And it's a long process. They make phone calls, there's faxes are sent back and forth between the agency and, say, Georgia Power. And it's obviously the customers are standing in line outside in the cold. It's a very, it's a tedious process. One of the things that we're doing with, I mentioned this barcode, is the customers now will be able to walk up to one of these locations, scan their barcode, immediately hit the utility systems, know exactly what their date to pay, the payoff amount, and payment will then go from that agency straight to Georgia Power, straight to that customer's account. And that'll all be done through mobile app barcode on their phone. You can actually print it on the bill as well. And again, the idea is taking the friction out of that process where the single mother of 3 kids is sitting at home, gets a text message and says, your bill has been paid and your lights will stay on. So when the kids come home from school, the lights are still on. That's a process that every major utility in this country deals with on a daily basis. And so we're hoping that this product will help smooth that out and really create some better family dinners at night.
Okay, so we got a flavor of some business use cases and some consumer use cases. Let me flip that coin around. What's getting in the way in terms of technology, engineering challenges perhaps, regulatory challenges? What is getting in the way of even greater adoption than we have seen so far?
Well, I actually did bring some statistics I want to share because the Federal Reserve just put out their study in December about
And,
adoption.
let me just add one more thing. There is a general perception
Yeah.
that mobile transactions are not secure. So
Right.
address security as well, if you will, please, all of you.
Yeah, yeah. Security is definitely the number one reason that people are not adopting mobile banking or mobile payments. Mobile banking is very pervasive as being offered, but only about 20% of consumers are actually enrolled in active in mobile banking. It's crazy. I was really shocked by these statistics. And only a quarter of the financial institutions offer mobile payments. Now, this is growing. I mean, this is growing. This is just where we are today. But that's really was rather shocking from the Federal Reserve. But the reasons that the barriers to adoption is absolutely number one. 70% of consumers have strong concerns about the security of financial transactions within that. And then there is some it was called lack of trust of the technology. It's not that there was any problem with the technology, it's just that they did not necessarily trust the technology. And so, because they, what they do today seems to work. And so they are afraid to try something new. Now, obviously, the younger consumers are much more adaptable to that and are adopting faster. But security is absolutely the thing. And that's one of the areas that I mentioned secure by design, and one of the areas that we really focus on within FIS is supporting the authentication as well as fraud detection services, and that is just being transformed. Of course, we're fighting. It's just a war out there with the cyber threats that we are all experiencing, the breaches that we've all seen, and unfortunately, most of us have been victims of. But there are some tremendous technologies out there to protect our identities and to protect our transactions, whether it be at the point of sale, whether it be at whatever point of transaction. But the advent of biometrics, whether it be the fingerprint with a device, iris scanning, facial recognition, it's unbelievable how far that has advanced just in the last, I would say, 2 to 3 years, and continues to advance. There is one technology that actually does iris scanning, facial recognition, some kind of heat recognition that goes along with the biometric all at one time. And it's truly amazing. But even that alone, there's no one tactic towards combating the criminal element. So it's a multi-layered approach that you have to take. You have to be able to leverage what's in the device, leverage the device itself, whether it be geolocation, the device ID, all of those the technology that's offered in the device itself, along with the biometrics, along with the information that you are able, that the individual is able to contribute to that equation. So it's a very multifaceted, multi-factored authentication process that is it's amazing, and it's just a constant battle. But the technologies are advancing so quickly. It's very reassuring to those of us that are in the industry that we can combat and raise that comfort level with our customers around security.
Spencer, barriers?
Yeah, so I probably have a bit of a contrarian point of view on this because, when we first started rolling out mobile payments like NFC, right? All the studies said the same thing. People were freaked out by it. They didn't understand it. And you got to remember, this is a time when they had no concept of what mobile payments was. There was no Google Wallet before there was a Google Wallet. There was no Apple Pay before then. So we had this big education hurdle in front of us. We had to educate people on what this new thing was, why they would want to use it, because it's cool and more efficient supposedly, although I'll tell you a lot of stories about that. But security was always right up there. And so when we launched ISIS, which later became SoftCard, we spent an inordinate amount of time in the sales and marketing development trying to anticipate and answer those questions around security. because we really did have a great security story to tell. If you think about the way modern mobile wallets work and the way we did, there's a very secure smart chip that was on the device, right? So when a payment credential got loaded down to that card, it was encrypted. The carrier couldn't get at it. The bank couldn't get at it. It was all hosted by these intermediaries. So it was really tough to figure out how to crack into that information. And if you had the computing power and some Russian mafia behind you to hack into this thing, you'd have to do it one phone at a time. So it's not like a cloud-based storage, of thousands of cards where you see all these massive breaches, right? So the phishing is a lot easier in some other pond than trying to crack a mobile wallet. So the net of that was when we went out to sell people on it, it was basically over their heads. They're like, okay, you're telling me all these things that I believe that it's more secure, but please stop talking because you're making my head hurt. At the end of the day, that really answering that question wasn't what moved the needle. It was honestly throwing money at them. So when we tried to get people to adopt the technology, the most efficient way to do that was to offer them an inducement. So you sign up for the ISIS mobile wallet and you'll get $50 credit to use on accessories at AT&T or Verizon. That worked. They got over their security pretty quickly. We, in a course of 14, 15 months, we had 5 million users on this platform. Cost us a hell of a lot to get it, but that was it, right? Security was kind of one of those things that people piped up about, but at the end of the day, they didn't understand it. Money took them in the right direction. Today, I actually think when you look at the statistics like that specific to very finite services, they're probably still accurate. But I'd wager that the people that are using mobile financial services and even mobile payments as a subset of today is much greater than is recorded in something like that, because anytime you're doing an Amazon transaction on your mobile device, you're using mobile financial services. Anytime you get an alert from your credit card company that says, a charge just happened, is that correct? You're using mobile financial services. So back to that point we made earlier that mobile financial services has permeated the whole commerce landscape. I think what happens is so many people have adopted it, they just don't know it. And when you ask them something point blank about something that sounds scary, like mobile banking or credit card on the phone, they kind of tense up. But if you go back and look at their behavior afterwards, you find out they're actually using a lot more services than they admit.
No, I totally agree with that. The correlation to, this was around mobile banking and what bank transactions and services are. When you throw in the mobile transactions that take place throughout a journey, it's going to be tremendously more than that. And the security security concerns are there. But the cool thing about that you indicated, when you make it more convenient and easier for customers to use a solution like mobile banking can be, that goes a long way, especially when you couple that with some of the new technologies for security.
Although I will say this, and I won't identify the CVS store, there's a clerk at a CVS store near my house. The woman is a little bit of the older generation. And every time I've used a mobile wallet in there, she has gone on this diatribe about how her brother used one of those and his bank account got drained and he's financially ruined. And I won't tell you all the intricacies of the stories, but whatever she described cannot possibly happen. I'm confident of that. But she's convinced. So I gave up trying to explain that to her a long time ago. She's a nice lady otherwise.
David,
I guess I'm glad I went last because you all did a great job talking about all the issues. I'm actually really a big fan of facial recognition software. I'm convinced that one day I'm going to stare into my phone and I'm going to be looking at Tom Cruise's bank accounts because I'm sure that's going to mix me up with Tom Cruise with that facial recognition. So, but anyways, I don't have a lot more to add. Obviously, security is wildly important. The industry that I'm in the energy and utility space is my clients manage nuclear power plants. They're wildly concerned about security. Anyone getting into their systems. We take payments for them, so we do PCI compliance. The one, I guess, the different thing is we do have to go old school sometimes, right? Because we have customers that want to pay with all these neat ways of paying their bills, But we still have customers that walk up to a Georgia Power office in Vidalia, Georgia, and want to pay cash over a desk, or they want to pay at the Dollar General in Waynesboro, Georgia, something like that. So as a utility company or provider to utility companies, we have to provide all different channels, and they all have to be secure, right? So that's part of what we have to do. But still, I mean, we have, obviously, as a small company, we have very large companies come in and audit us on a regular basis. Again, I just don't think I can add a whole lot more than we truly view security as baked in from the very beginning.
Okay, so we defined the industry, we identified some of the use cases, where some of the traction is and where some of the barriers are. I'd like to open it up to questions. And if you, address your questions to any one of the panelists. So the question is, is there a way in which you can differentiate debit and credit transactions, which are initiated from the phone? Okay, so consistency of experience at the point of sale and the knowledge of the person behind the counter.
It's funny because Spencer and I we had a conversation about this before we kicked this off, but absolutely we see that, and we have, I've mentioned before that our customers will go in and make a payment using the barcode at a Dollar General, Family Dollar, CVS, pharmacy, places like that. We've had customers turned away, right? And they walk up, they try to scan it. They say that we don't do that here. Well, you do it, right? And they'll turn them away, and it's a training issue. I mean, you still have a little bit of the human element still, and then we'll go back to that store. They'll have to retrain the people at the point of sale because they're concerned. They are concerned. I've had this argument with someone at a point of sale where they scan my barcode and I'm about to give them cash, and I said, I promise I'm going to leave here with less cash than I had, and you're going to have more cash than I had, or than you had coming in here. So I don't really know how else to answer your question, but there is that human element. There is the aspect of training. The more payments that happen, obviously, the more likely that's not going to happen. So.
Still makes me think of Bill Clinton. I feel your pain. I tell you, man, I suffered through that pushing that contactless payment rock uphill for so long, and we had stats in the early days that MasterCard had put out that said it's so much faster than using your card, and the reality was never there, because you have to come up and it's not a tap and go in a lot of cases. It's a hover and it's a twist or it's a stand sideways, and then if the POS isn't set up or the back office system, now it's asking you to process it as a debit and it's a credit card and you're not sure what's going on. And just the clerks, the training, they've got so much else going on. They're not an expert in mobile financial services. So, I'm still waiting for that to get better. I'm primarily a Samsung Pay user as well because of the magnetic stripe technology, or what do they call it? Magnetic? It's MST, but because you can use it more places, right? Which is another problem. If you're just using pure contactless, you got to figure out where you can use it, which makes your adoption of that product or usage of that product really struggle. But it's honestly one of the reasons why I was so enamored with Wonder and why I jumped in with them, because with everything linked to the card and not touching POS, you don't have to worry about any of that stuff. It just happens, as they say, kind of automagically. And the mobile's role in all of that is to drive the enrollment in a promotion or an incentive to link to a card, and it's to message to the consumer. In that instance, the mobile device doesn't actually have to play a role in tendering payment at all. So you sidestep all of that complexity. And the last thing I would tell you about it is, both through focus groups, personal experience, and observations, when somebody's a new adopter of contactless payments and they're going up to a register and they go to tap and it doesn't work right away, if there's people queued up behind them, they can physically feel the laser stares of the people, and it becomes a point of anxiety. They start to get uncomfortable because they feel like they're holding up the line, and that can ruin their prospects for becoming a prodigious. Yeah.
Okay, any?
Yeah. Now, I would just add, I think what's interesting about the whole thing is this is an evolution. Just think, think of all of the different ways that this has evolved. So we're still accommodating all of the different techniques, right? Whether it be the card swipe, the card dip, the tap, the scan, all of that is very, I cannot wait till the day where I can just have my phone and I can be shopping and I can either in store or before I get to the store and I can pick out what I want and I can go pick it up and go. Just like Kroger is starting to do, just like we do, I talked about Panera. I mean, Kroger is actually going to let you do scanning in the aisle. DSW has endless aisles where you can just go to, if your color and size shoe is not there, you can go and you can order it in store right there and have it, I don't know how long it takes. But, I mean, all of these, that's the advancement to me where we do card processing all day long, but where payment processing is going to get to, I believe, is something more like that experience where you're not having to decide, okay, what can I do at the point of sale? You are the point of sale. Your mobile device is the point of sale.
Okay, any other questions? Okay, so the question is, when do we expect to see an inflection point based on a generational shift and their facility with the technology?
We actually have a pretty interesting study. It's called the PACE study, where we studied the millennials and Gen Z. The millennials, and we kind of divided. There's an older millennial group. They're probably a little slower on the adoption curve, but those younger millennials that are basically probably 25 and let's just cut it maybe at 25 and under, when they are going to be the largest employee group ever. They are going to end up with the boomers' money, and when all of that happens, which is happening right now, then I think we'll see that transition. It's happening right now.
Do either of you have a point of view?
Yeah, I mean, I'm not going to hazard a date guess for you or anything like that because I'm guaranteed to be wrong. But what I think is interesting is, there's so much focus on digital commerce in general, and you see all of the growth every year of e-commerce and Amazon just continuing to grow at crazy rates. And I know the stats are probably a little out of date, but when you look at the amount of money that's spent online versus in the physical world, it's still like 10 times the amount in the physical world that's online. Mm-hmm. So when you want to see those transactions really switch to a mobile or all digital, it's got to happen in the physical world. And it's happening. It's just happening through this fractured modality that we're talking about.
And they're driving each other. So when you have someone that uses combines mobile activity with in-store or in-branch or whatever, they end up buying more. They complement one another. It's amazing.
I would only add because I'm the old school guy, obviously, right? I think you'll see, I know when Dodd-Frank was first introduced, a lot of people left the banking industry and went back to cash. So if people are going to stay out of the electronic banking industry, some of it will depend on federal legislation, right? If Dodd-Frank sticks around, you're going to have underbanked people out there for some period of time, right? If they change the banking rules, then maybe more people will go back into the electronic banking world and be able to make electronic payments. So I would just caution you that, again, you're going to have, probably as long as everyone's alive in this room, you'll be having people pay cash.
Okay, one more question. So the question is, the adoption of contactless payments outside the U.S. being so much broader than the U.S., what do you see as both a comparison between the U.S. and the rest of the world, and is the rest of the world leapfrogging the U.S.?
Well, the rest of the world is advanced, is much further along in that, especially in the EU and in UK, because of EMV and the adoption of EMV, which was the chip and pin card technology. So they had adopted that much more in advance, and we were so slow here in the U.S. to do that. So they adopted EMV, and therefore then they adopted the next generation of contactless faster. We just are still in the process of adopting EMV chip and pin, and it is very expensive for merchants to do that. So the whole thing about what is acceptable at the point of sale, it is across the board. It is a mixed mash bag. And so it is difficult to get the merchants to invest in the contactless point of sale terminals when they just made a big investment in EMV, chip, and PIN. So that's the challenge that we're seeing.
I think part of that too is a lot of the merchants who had to switch over to EMV adopted terminals that were contactless capable, but there was additional development that had to happen to be able to utilize it.
Yeah.
So there was such a headache and a hangover now from
Right.
EMV that they're just getting around to it.
Yep.
I will say there was another dynamic that has thankfully played out in the marketplace that was stymieing a lot of contactless adoption for years. And that was the creation of a consortium called the Merchant Customer Exchange, MCX. So this was spearheaded by Walmart and others, and they had about 40 major retailers. And so they were trying to do their own mobile wallet play. And rightfully so, or wrongfully so, depends on your opinion on that, but there's a constant tension between financial service providers, card issuers, and merchants around the fees that merchants pay to accept those. Sure. So they were trying to do a play to figure out how to lower their cost, which is certainly their right. But what happened as a result of that is those 40 merchants, which were major brands, were off to the side for years. So they were focusing on their efforts, and part of the participation in MCX meant that they were not allowed, in many cases, to accept contactless payments from other wallets. So that consortium has ended. The technology was sold, I believe, to Chase some time ago. So now a lot of those merchants are adopting contactless, but you lost, 4 years of adoption capability because major places where you would want to pay, you couldn't pay. And back to the idea that, driving habituation, it only takes a few disrupted opportunities to pay before somebody decides, now I'll wait on this, my plastic card works fine. And then they never get back to it, or it takes them a long time.
Yeah, I was just going to say, it's been at least 20 years since Europe adopted the chip, because when I moved to Paris 20 years ago, they had a chip, and I thought it was the coolest thing. So, but yeah, we're behind the curve.
I'll give you one perspective as well. I mean, you have Europe, but you also have the developing world like Latin America and Asia, where those countries are going from one generation of technology straight into another generation, skipping the piece in the middle. For example, you take a look at cell phone adoption in countries like India, and that's being driven by is the fact that the landline network is so poor that they're going straight from not having phones to cell phones, right? So you find the adoption and leapfrogging to completely new and different ways of doing things happening in the Middle East, in Asia, and in Latin America rapidly, simply because in the 1950s, we invested so much in an infrastructure where you can pick up the phone in Key West and call Alaska, and the quality of service is fantastic. So in some ways, the work that we did in the 1950s is holding us back, which is kind of an odd thing to do. So one more question. One last. What role is GDPR going to play in the context?
It's an easy answer for me. I don't know. I'd never heard of that before. So,
Yeah, me too.
but I've been out of the contactless space for several years now, so I'll bow out.
Well, we'll close with that. I mean, obviously, the idea around consumers having control over their identities and how their data is used, and how it can be in every place that they need to be authenticated and approved with every payment provider. Frankly, it's rather overwhelming to even consider everything that needs to be done to support the GDPR requirements. So as it pertains to contactless, I would love to learn more about that.
So to wrap this up, I'm going to put each of you on the spot. I'm going to ask each of you in 30 seconds, look 10 years out and look at your crystal ball, and what's the course and speed of mobile financial services? What do you see happening 10 years from now?
Well, if we can call Alexa mobile financial services, then that's what I will see is happening in the next 2 to 3 years. Between Alexa and everything, what we call the Internet of Things, with whether it be the devices, most of us have 3 or 4 or more devices that are now connected, of which we can do commerce with. That is where we're going. whether it be, I still don't know about the refrigerator thing, but I know that's a thing. But I mean, Levi Strauss is rolling out a jacket where you can just swipe here and you can make a payment.
That's it.
Well, in 10 years, hopefully I'm going to be retired, so I won't care about any of this stuff. You know, I don't know where it's going to go other than it's just going to continue to diffuse through all the other touch points that we do in commerce to the point where maybe we'll stop talking about mobile financial services. It'll just be financial services and commerce.
That's right.
They'll be intertwined. So in my space, someone mentioned the term of smart home earlier today, and so the concept of when I talk to my clients, they want someone to walk into their house, been using Alexa, and say, hey, Alexa, you know, how much energy did I use yesterday? Well, I used $5.25. Alexa, I'd like to pay my power bill. How would you like to pay your bill with my checking account or whatever? How much energy am I forecasted to use tomorrow? I want to put my house on, you know, enroll in a rate that's best for my house today, right? Because a lot of utilities have different rate plans for different times of the year and times of day and that type of thing. So I think, again, you'll see a smart home intertwine then energy efficiency and with financial services payments because it'll be much more seamless between the two.
So you heard it, Alexa is the future. Is Siri listening? I don't know.
Thank you. Let's hear it for